Do you want to go solar, but the confusing financial information is holding you back? Don't worry, you're not alone. You shouldn't need a PhD in economics to read a solar proposal. Let's review the details and explain the numbers. Let's start with solar project cost structure. Here are some important things to know. System size is the number of solar panels multiplied by the panel wattage. Next, the gross system cost is the all-in cost for your system before any incentives. The utility rebate is the rebate from your utility company to help offset the gross system cost. The contract price is the gross system cost minus the utility rebate. This is the amount you should pay or finance. The Federal Investment Tax Credit, or ITC, is a 30% tax credit on the contract price. This is an actual credit, not a tax deduction, so you'll see the full 30% amount in additional tax savings. Expect to receive this on your next income tax return. The final cost is the contract price minus the federal tax credit. In order to compare your system cost to the other solar systems in your area, you need to determine the solar system price per watt. Don't worry, this is easy. Start with the system size. For example, if your system includes 30 300-watt modules, then your system size is 30 multiplied by 300, which equals 9,000 watts or 9 kilowatts. Now divide the gross system cost by the system size. For example, the 9 kilowatt system should cost around $27,000 before rebates. So the cost per watt is equal to $27,000 divided by 9,000 watts equals $3 a watt. Next, call your utility and ask for the average price of solar in your community. Is your cost higher or lower? If your cost is higher, find another solar company. Now you know the size of the system and the cost. Is it a good investment? Let's look at the numbers. Simply stated, your solar system will produce electricity. That's electricity you no longer need to buy from the utility company. The time it takes for the monthly solar savings to recoup the initial investment is called the payback period. For example, if you bought a magic money printing machine for $1,000 and printed $100 every month, you'd recoup the $1,000 investment in 10 months. So in the solar example, let's say it will take you 9 years to recoup your original investment. That's a 9-year payback. Since most solar systems come with a 25-year warranty, you'll still have 16 more years of free electricity. Another way to look at the financial benefits of solar is long-term cash flow. The long-term cash flow is the amount of savings the system generates over the life of the system minus the upfront costs. Typical 25-year cash flows for residential systems can be anywhere from $15,000 to $20,000. Those are real savings. Well, that's it. Ready to go solar? We can help.